Alrighty, guys, good morning and happy hump day. This is Taylor kicking things off for the 5th of October. Let's do a quick sound check in the free room. We are live in action on YouTube. All right, good to go. We got Chris B, Mirza, Lee, Lorna, Andrew. The whole gang is here. All right, guys, we will jump in. We got about 45 minutes here before the cash open, and we've got a frisky market on our hands this week. So remember, the title of my Sunday video was Bounce or Die. And so far, they done bounced the market. So pretty good short squeeze here on Monday and Tuesday. Now the question is, of course, can the bulls take the market a little bit higher, or do we roll over from here? Definitely some progress to be mindful of, though. So remember, I think the key things right now, there's a few important things. Is the volatility index, the VIX, above or below 30? Is the dollar, the dirty Dixie, above or below that daily 21 EMA? And then the junk bonds, HYG, are they above or below 73? Then the other important thing is, do we get any buy signals? So a few stats for you guys here. I think those of you that have the big 3 indicator, you'll find this pretty interesting. This all applies to the SPX, by the way. So the last time that we had daily buy signals on the SPX was the summer of 2021. The last time that we had buy signals on the 4-hour chart was a year and a half ago. Pretty crazy. More importantly, the last time that we had 2-hour buy signals, 1-hour buy signals, and 30-minute buy signals was back here in August. And of course, if you look at the S&Ps back in August, here we are. Pretty substantial short squeeze. And then a couple more things here. Last time that we had 15-minute buy signals was back there during that little push in September. So basically, guys, what I would expect here from the indicator, if we're going to get a few more days of continuation higher, similar to back here in September, or to take it a step further, if we're going to get a rally like we had in August, my expectation is at a minimum, I should start to see some 15-minute and 5-minute buy signals. That's like at a minimum. If we're really going to rally here, if we're really going to trend to the upside, I need to see some 30-minute buy signals and some hourly buy signals. So the interesting thing is, regardless of that huge rip we had yesterday, no buy signals here on the SPX. And remember, guys, I'm always looking over here in the right-hand corner at the big 3 labels. So for the SPX, you have your daily sell signal, and then everything else is neutral. So the thinking is we get really oversold. And I want you guys to imagine, down here at the low, we pretty much have a sell signal on every time frame. So the market gets a little bit oversold. People get trapped short. This 2-day rally, it's not so much a result of things going from bearish to bullish. Otherwise, we would have buy signals, right? This is all a bit more signs of exhaustion, where we've gone from really, really bearish to kind of more so neutral under the surface. So that transition, like that exhaustion of all that bearish momentum, that can certainly trigger a nice pop. And I think we've gotten a pretty nice pop here. For this to continue higher, we have to make that next transition from neutral to bullish. So for now, guys, the S&Ps have no buy signals, and with the impending 1% gap down, we're obviously not going to wake up to any buy signals. And even on the futures, not a buy signal in sight. Quick look here at the QQQ. So for those of you with the indicator, pay really close attention to this. We're not going to trend higher unless we start getting some buy signals. So the QQQ, we are neutral under the hood. And on the QQQ futures, I hear futures, they got a whole lot of nothing. So I do think really important. Now, as far as those other things on the list, is the volatility index above or below 30? And here's the thing, guys. I'm not sure 30 is the big anchor to 30. Pretty simple. If we get back above 30, we're probably going to see VIX trade higher, which means you see the market trade lower. I think the real level here is just that daily 21 EMA. because you have to look at the structure of VIX here, kind of see it for what it's worth. Pretty good trend. You're still holding support above that 21, and you still have that buy signal there on the daily chart. So as far as like the over-under game, I don't think we're out of the woods here, as long as the VIX is above that 21 with a buy signal. So if you're bullish on the market right now, you got a bunch of calls. What you would ideally want to see is the VIX breaking lower from here. Of course, if you're short market, you would want to see the VIX continue back towards 30, 31, eventually 35. So VIX is kind of a toughie here. You guys can see the correlation, right? VIX pulls back for a few days. Of course, we get a pretty good pop in the market. Structurally, the VIX still looks pretty strong. So I'm not sure I can look at the VIX and say, we definitely can't look at the VIX and say, yeah, this is working in the favor of the bulls. We're not there just yet. Now, as far as the dollar goes, the dollar is going to be a toughie. So, of course, the correlation here, weakness in the dollar, like the dollar pulling back is going to send the market higher. So yesterday, there's some big progress out of the dollar from that perspective. We get our first close under that daily 21 EMA. But as you guys can see here this morning, she popping right back above that mean. And we're still in a very strong uptrend with daily buy signals. So the over-under game here on the dollar, above that 21 EMA with that buy signal, not good for the market, meaning you probably see the S&Ps trade lower. If they can continue to drag the dollar lower and lower, then it's good for the market. But I don't know, guys. From my point of view, again, that pullback makes for a nice pop in the market. A day like yesterday where the dollar is down like 1.5%, it makes for a great day for the market. You take a step back and you look at the trend here, it's still super bullish. And like any other trend out there, above that 21 EMA with a buy signal, got to be inclined to think that continues to trend higher. So if you are long the market, you want to see the dollar trading as low as possible. If you're short the market, ideally the Dixie does what it's doing this morning, gets right back above that 21, and eventually boogies back up there towards 114, 115. So still a super, super strong trend. So even that, I can't quite look at the dollar and say, yeah, it's game over for the dollar. Appears to be pretty bullish for now. And then HYG had a huge day yesterday, like really big day yesterday. Rips back above support at 73. You actually crank out a close here above your 21 EMA. We're going to open up this morning, right around 73 bucks, maybe a little bit lower. So, of course, guys, if you are bullish on the market, you want to see HYG, really hold above that daily 21. And ideally, you want to see it cancel out that daily sell signal. If you're short the market, you want to see HYG heading back towards those lows around 70 bucks. So that's where, jumping in here this morning and getting long immediately, for me at least, it's a tough decision. I don't see things that clearly just yet. We're going to wake up. Well, we're already awake, most of us. The market's going to open up here in like a half hour. HYG is going to be, hanging around or under 73. So no drastic improvements. The VIX is going to be still above that 21 EMA with a buy signal. And now, of course, you got the dollar creeping back above that daily 21 with a buy signal. So granted, we saw a pretty good 2-day push. But as far as the bigger picture of the things that really matter, I don't think we have enough improvements to work with just yet to justify wanting to buy, calls on everything for a swing trade. And then again, throw into the mix. At a minimum, back here during that push, we had buy signals on the 5-minute and the 15. Right now, we don't have either. And then throughout the course of your August push, you're getting buy signals on your 5, your 15, your 30-minute, your 1 hour. Of course, we got none of those So a little bit of caution here, guys. Now, here's the thing. The dip that we're going to see here this morning, it doesn't necessarily imply the market's going to fall apart again. The nature of these short squeezes is they trap the shorts. They squeeze them in such a violent fashion. That strength isn't always sustainable. Like, pretty slim chances the S&Ps go up 3% again today, and then again on Thursday, and again on Friday. At a minimum, when we end up this overbought on the hourly chart, always wait for your first back test. Yeah, always wait for your first dip. And that's where we get to learn a lot about the market. So the danger, so to say, of blindly buying calls into this pop is when the first back test just totally craps the bed. The market gets oversold. Right? Everybody getting short down here. They trap the shorts. They squeeze the shorts. They squeeze them in such a fashion. Now we're up there at like 2 to 3 ATR on the hourly chart. Even if we're going to trend higher, in the short term, it's not sustainable. You always got to wait for your first back test. In this example, the first back test totally failed. And right back down we go. What I would suggest you anchor to is your hourly 21 EMA. If they can hold it above the hourly 21, I think the bulls have still got a fighting chance here. If the first back test totally blows through the structure, we're probably going to go right back to the downside. So let me see. S&Ps are going to open up around 3750-ish, maybe. Yeah. We'll see how that all goes today. But bigger picture, guys, my opinion is still, this rally doesn't last. I think even if we get up here to 3850, 3900, I just think it's a great shorting opportunity. So the only trade on my book right now is a November expiration call credit spread here on Apple. And then also keep in mind, like we talked about over the weekend, Apple under 150. The door is wide open here for a flush back down towards those June lows. If that's the outcome, it's going to put a lot of pressure on the market. Then I think you have to consider Tesla under 265. Would appear to me the door is wide open for a flush down towards 205. Two heavily weighted names with a lot of room back down towards those June lows. If they can't, quickly, and the key word is quickly, fix the structure of Tesla and fix the structure of Apple, meaning get them back above support, path of least resistance is to the downside. So even though the S&Ps have made a new low, even though the Qs have made a new low, your Microsofts, your Googles, your Nvidias, like basically half of the market, even though they've already made a brand new low, they're going to trade much lower. Tesla pulls back from here and Apple pulls back from here. So it won't be a dull one, my friends, but and take it day by day. As always, never marry any of your ideas. But I can't look at anything in the charts right now. In the indices, in the apples, in the dollars, the HYGs. That leads me to believe we're out of the woods. And it's just time for us to wake up and buy every dip. Rather, this all kind of strikes me as a normal bear market bounce. The S&Ps get oversold. We rally back to that falling 21. We're still rocking that sell signal. From an ebbs and flows perspective, it would make total sense if the market just rolled over again from here. So I don't think this bounce is believable until you start to fix that structure. Can the S&Ps get above the daily 21 and cancel out the sell signal? Otherwise, we trend lower. And that's kind of the theme right now. Big day yesterday from the QQQ. That might be nothing more than just reversion to the mean. Huge flush. We're oversold. Rally back to that falling 21 and then roll right back over. I mean, that's how beaten down the market got. Huge rally here over the last 2 days of the QQQ. Doesn't even quite get you to the 21. never mind above it. So be mindful of that. From a structure perspective, yesterday's rally didn't change anything. XLK is still trending under that 21 EMA with a sell signal. Nothing changed there. The semiconductor sector is still trending under the 21 EMA with a sell signal. Same thing goes for, let's see, the industrials under the 21 with a sell signal. The financial sector, and they actually got above the 21. But the point being, guys, is try to fight that temptation to be the first guy or girl to the party. Of course, in a perfect world, we all bought a shitload of QQQ puts down here at 267. It's not a perfect world. If we're trying to potentially put ourselves in a position where we can bank on a big continuation rally like that back there in August, basically you study that move from back there in August and you look for the same things to line up. Like none of that is lining up at all. What happens back here in August, right? Just two basics. We start trading back above the daily 21. And like I mentioned earlier, the 5 minute, the 15 minute, the 30 minute, the 1 hour, the 2 hour, they all went bullish. So frankly, I could get rid of like all these other things over here and just anchor to that. Are we above the daily 21 EMA with lower time frame buy signals? Everything else can take a backseat to that. So we'll see what's up here today, guys. Again, not to push a particular narrative, I'm looking for reasons to change my opinion. That's why I'm paying attention to the VIX. That's why I'm paying attention to the dollar, HYG, and that's why I'm looking for buy signals. The only open trade I have right now benefits from the market totally rolling over. So rather than waking up and looking for things to justify my current trade, I actually want to look for the opposite. Like, am I missing anything here? Is there anything developing under the surface that might cause this market to trade a little bit higher in the short term? And I'm not looking for that because I'm worried about my short position going against me. It's a little bit more so, hey, if we're going to rally to 3,900, your boy wants a little bit of that move. A little bit of cheddar on that push. So quick recap here today, guys. And the easiest perspective, as long as the S&Ps and the Qs are under that daily 21 EMA, and if you have the big three indicator, if there's no buy signals, nothing's really changed here. It's a bear market bounce. It's an oversold rally. We have not gone from bearish to neutral to bullish. The only accomplishment up to this point is we've gone from like super freaking bearish, like literally a sell signal from a daily down to a 5 minute, to neutral. We got to get that next transition to continue to trade higher from here. So quick look at the futures. Let me get the S&Ps down about 1. And again, I think to an extent, a dip here this morning is normal. That strength isn't sustainable when we end up overbought on our lower time frames. So the huge question is, okay, we're gapping down this morning. How does the market handle this gap down? Do we get another one of these? Well, then it's game over as far as looking for higher prices. Do we instead pull back to the hourly 21? We find some support, we hold up, and the buyers come right back in. Well, then maybe you're looking for higher prices. So be patient, guys. I'm still looking to short into this. So the higher the market goes, the better we get as far as risk versus reward on our short positions. But your S&P futures down about 1. You got the QQQ futures down 1. You got the small caps. Your leadership yesterday. Yeah, like look at that. The small caps actually closed above the 21 EMA yesterday. And we're kind of going right back underneath it. Small caps down 1.2. And the big Dowski down about 1. So, in plain English, is this nothing more than just a reversion to the mean? Stay tuned, guys. We shall find out. But as always, if you all get any questions, any charts I want to take a look at, any questions, any complaints, I'm here for it all. I got to make sure I'm, let me see, what time is it? Yeah, we got some good time. I got to be in the gold room. The gold room in a few minutes here. Yeah, SMB, I'll make sure to get that posted this morning. Thank you for the heads up. I appreciate that. I'll make sure they get that on there. Timbo, can the ECB rates in Europe affect the S&Ps? Timbo, to be transparent with you, I'm not too knowledgeable on things of that nature. If you happen to be in the options room, or I mean, you're here in the free room, so you're here as a minimum. That's probably a great question for somebody like Samuel Shames. That tends to be his area of expertise. Andrew, do we wait for a red bean, a sell signal on the Apple 5-minute before adding to our position? Yeah, Andrew, good question. So as far as adding to shorts here, yeah, as far as it applies to Apple, yeah, that makes some sense. Could it roll over from here? Sure. Could it trade a little bit higher? Of course it could. Right now we're just neutral. So we're not going to wake up here with, overwhelming evidence that Apple's ready to just rally back towards 150. But we're also not quite going to the session with, sell signals up the wazoo. So yeah, I think you wait for a few sell signals on Apple. Most importantly, though, because remember, Apple didn't rally yesterday because of anything to do with Apple. Peloton didn't rally yesterday because anything's improved in Peloton. It was a market-wide short squeeze. So really, the first place we want to see a sell signal is going to be in the S&Ps and the QQQ. Because, of course, if they roll over from here, they've taken the whole ship with them. But I do think, Andrew, as we've seen, because of how strong these short squeezes can be, I think there's a lot to be said for waiting for a little bit of confirmation. Little 5-minute, little 15-minute, that'll do it. That'll do it. Alex, what's up, Alex? Always good to see you. Yeah, how's oil doing here? These are always a toughie for me. These are always a toughie. Of course, bigger picture, the issue is you are in a bit of a downtrend. Falling 50 SMA, falling 21 EMA. The 21 is under the 50, so you have that negative moving average cross. Bigger picture, that all points towards, you're in a downtrend. You short the rallies, path of least resistance is to the downside. On a much, smaller scale, it is trying to fight that good fight. Get your first close back above that 21. If there were any sell signals, they've all been canceled out. And now you got a fresh 15-minute buy signal. So down here, we're incredibly bearish. Now we've kind of gone from bearish to neutral. And now based on the 15-minute chart, this might be trying to go from neutral to bullish. So now the key, of course, from a structure perspective, can this hold above that 21 EMA and then continue to rebuild those lower time frames? Does the 15-minute chart start to take on trending properties? Clearly for now it does. 21 EMA pointing higher, 50 SMA pointing higher, positive moving average cross, and buy signals. 30-minute chart drastically improves. The hourly chart improves, so that's the key. From the top down, we're still in a downtrend. So to combat against that, we got to fix some things here from the ground up. So I think to the extent this can hold that daily 21 EMA, and then it continues to improve the structure under the surface, maybe at a minimum a nice pop towards the 50. But being that you're still in a downtrend, if you get that first close back under the 21, it is liable to trade, right back down towards the downside. Hey, 007, what's up, man? Good to see you in here. Yeah, Jimbo, I love doing that. Looking at the inverse charts. Let's take a look. Yeah, doesn't that offer such a good perspective? I think for a lot of us, if you've been trading for say you've been trading for 10 years or less, by default, most of our experience is in an uptrend. So a lot of times, just flip the current chart upside down. It's going to offer some clarity. The inverse chart of the S&Ps kind of looks like your classic buy the dip, right? Monster push. Here's your first good pullback. Now, if this holds support above that 21, then we get a 5-minute, 15-minute, 30-minute buy signal. You're looking for continuation higher. Right? Here's the inverse chart of the QQQ. Big rally, reversion to the mean. If we get some support and buy signals, we're looking for continuation. Let's see, Apple. Apple on the inverse. Oh, yeah, for sure. Buy the dip, you buy the dip, you buy the dip. I think that strips away some of the emotion. There's so much emotion behind a short squeeze. Sometimes, guys, that short squeeze is literally nothing other than just reversion to the mean. It's the ebbs and flows of your downtrend. I think you can kind of see that with a bit more clarity when you look at it from an inverse chart. Like, okay, I know what to do with this. Right? This is all pretty familiar to me. We got an uptrend. We got a rally. Here's a first dip. We know what to do from there. We know what to do from there. Let me jump in here to YouTube, guys. Make sure I'm not missing any questions on that end. Well, we got a good crowd on YouTube. We got Robert, Miss Janice. We got Jace, Bill, Sebastian. Well, we got a crowd in here. So Chaz, personally, I'm still leaning bearish. And I have to lean bearish bigger picture, and understand what that means. Bigger picture means my opinion doesn't change here on this, 6% rally we've seen over the last few days. But I remain bearish bigger picture. Because the problems for me, as far as hey, here's why I think the market trends lower, those problems start from the top down. That's why I'm so hell-bent right now on, can we even get a 5-minute buy signal? Can we even get a 15? All these problems from the top down, we can only fight that if we fix things from the ground up. So for me, the first thing that points towards, continue to expect more downside is the structure here of the monthly squeeze. Just the basics of a squeeze under that 21 EMA with a negative histogram. And remember, it's the first negative histogram on the monthly chart since the 2008 financial crisis. Even the COVID flush didn't kill the momentum of that trend or any other catalyst or period of selling we've seen since 2008. So for me to change my bigger picture opinion, the bulls would have to clean up the structure here of that monthly chart, which for me basically means, can they take this back above the monthly 21 and keep it there? That kind of requires a move back to 42 plus, 4,200. So I think bigger picture, as long as we're under that monthly 21 and that histogram's rolling over in the favor of the bears, then a 15-minute chart or a 30-minute chart, it all kind of points towards eventually that squeeze fire is short. So kind of at a minimum, I'm going to look to continue to short the bounces unless that changes. In other words, if they can cancel out the growing probability of that squeeze wanting to fire short, then I'll have to change the opinion. But a good example here is this week. Like the S&Ps are up, what, like 6, 7, 8%? We're not even in like the neighborhood of improving the structure of that monthly chart. So it kind of boils down to that for me. Then of course you got the weekly squeeze here. And then we got a few other things on the list. But yeah, back above that monthly 21 EMA, for me at least, becomes a lot harder to want to, get short and stay short. Good morning, Aaron. Yeah, Jace, what a crazy move in Tesla yesterday. I don't know where I went. I think I went to the gym or something. And all of a sudden, down goes Tesla, and up goes Twitter. Yeah, that's just absurd. To be frank, I haven't traded too many. I don't know. What do you call it? A potential buyout? I forget the exact price they've agreed upon. Not too sure what to expect from Twitter from here. Like, how long does it actively trade? Does it open up at the buyout price and kind of sit there? But I would agree it's due for a dip. a little bit of a dip might be in order. But all right, guys, I'm sorry. I've been gabbing here all morning. I got to be in the gold room in 2 minutes, so I got to cut you guys loose. But if you guys want, we'll have the recording of this session up on the YouTube channel shortly. If I did miss any questions this morning, feel free to go to recording. Leave your question down in the comment section, and I will. I'll do my best to get back to you. And then I also invite you guys here on YouTube to join me today in the free room. I'll be in our free room later this afternoon, and we're going to talk about benefits and disadvantages to different kinds of option strategies. Credit spreads versus debit spreads versus buying calls and puts. But I will let you guys go here. I wish you all the best of luck today. As always, I hope you found the analysis helpful. And again, the biggest thing I'll leave you with is you're not going to see anything like that unless we can get the indexes back above that 21 EMA and we actually start to get some lower time frame buy signals. So stay tuned. I'll keep you guys updated. But I got to run here, so I'll talk to you soon. Thanks for your time, guys.